Alright, let's get right to it. A company at the absolute heart of the AI revolution, a key partner for Nvidia, reports staggering 207% revenue growth, and its stock immediately falls by over 20% in a single day. So what's the lesson here? It's not just panic selling. It's also blindly buying this dip, thinking you found a bargain without understanding why the market just ran for the exits. And if you don't want to listen to a random guy who doesn't show his face, here is the bottom line. The market is terrified because Coreweave's incredible growth is costing them a fortune. And their guidance revealed that the path to actual profit just got a lot more expensive and a lot less clear. The stock is now balanced on a knife's edge, a critical technical level that will likely decide its next major move. If you want the data and the technical picture behind that conclusion, stick around. For those of you who are new here, my name is DataCat. I used to be an analyst, a random corporate slave really, stuck deep inside one of those massive Fortune 50 companies you hear about. My job was to stare at spreadsheets until the numbers blurred. I eventually traded that life for more spreadsheets, to be honest, but at least now they're on my own screen. My whole thing is looking at the data, not the hype. So if you find this kind of breakdown valuable and you want more no-nonsense analysis, consider subscribing. It's a simple click for you, but it makes a huge difference for a new channel like this one. Now let's figure out what's going on with Coreweave. First, you have to understand what Coreweave actually is. Don't think of them as a generic cloud company like Amazon Web Services. That's not it. Think of them as a purpose-built deployment engine for Nvidia's most advanced AI chips. Their entire business is built to do one thing exceptionally well: get their hands on Nvidia's best graphics processing units, like the H100 and the new Blackwell systems at a massive scale, and then build the hyper-specialized data centers needed to run them at full throttle. This relationship is deep. Nvidia isn't just a supplier, they're an investor in Coreweave. This signals a huge strategic alignment. It positions Coreweave as the go-to partner when a company like OpenAI needs computing power on a planetary scale. Coreweave builds the power plant for Nvidia's world-changing technology. So, if they're so important, why the collapse? This is the paradox. The numbers they just reported in Q2 earnings sound incredible. Revenue for the second quarter was $1.2 billion. That's a year-over-year growth of 207%, driven entirely by demand for their Nvidia-powered services. Their adjusted operating income was $200 million. But here's the first clue: their net loss was $291 million. Despite huge revenues, the cost of building these specialized data centers is so immense they aren't profitable yet, and their spending is astronomical. Their capital expenditures, the money spent on land, buildings, and all that Nvidia hardware, was $2.9 billion in this quarter alone. On the other hand, they have a contracted backlog of $30.1 billion. That's the total value of contracts already signed for future work. The demand is clearly there and it's locked in. So you have this picture of insane growth and insane spending. The CEO, Mike Entrater, basically said the market is structurally supply constrained. What he means is that the demand for AI compute is so far beyond the world's ability to supply it, that the main problem has shifted. It's no longer about getting enough chips from Nvidia. It's about finding places with enough raw power to plug all those chips in. This is why they're trying to acquire Core Scientific, a data center operator. It's a critical move to control their own destiny and speed up how fast they can bring these massive new GPU clusters online. But this is where the real trouble started: the guidance for the future. Management raised their full-year revenue guidance to between $5.15 and $5.35 billion. That's good. If you've watched my previous video about the broader market concerns, then you'd know that this is the kind of number that should impress investors even in a downturn economy. So, what's the problem here? Well, there's a tiny devil dancing in the details this time. They actually left their adjusted operating income guidance unchanged at $800 to $830 million. And that's the red flag. Why would your expected revenue go up but your expected income stay flat? The chief financial officer explained that they are spending a ton of money now on data center leases, power, and equipment for a massive expansion in the fourth quarter. Those costs hit the books today, but the revenue from that new capacity won't show up until later. And the market, much like my cat when his dinner is 5 minutes late, does not like to wait. It sees rising costs and a longer, more expensive road to profitability. So you have two competing stories that are so divided, I decide this is a worthwhile video to make, despite that the YouTube algorithm might not favor me this time. The bull case is simple. It's the story management is telling, is that Coreweave is Nvidia's chosen partner. They have privileged access to the best hardware, a multi-year head start, and tens of billions in locked-in revenue. They are building a fortress based on their unique ability to deploy this tech at a scale no one else can. The bear case, which is what the stock chart is screaming, is all about near-term risk. The company is burning through billions of dollars. The flat income guidance spooked investors, signaling that growth is coming at a very, very high cost. For a stock price for perfection, just being great wasn't enough. The fundamentals tell us the why. Now let's look at the chart for the what. What we saw was a textbook day of panic. The stock gapped down over 10% at the open and then just bled out all day, closing at the absolute low. The volume was more than 2.5 times the average. This long red candle is undoubtedly bearish. This wasn't a small shakeout, this was institutional selling. In one session, the price sliced through its 20-day and 50-day moving averages. Those levels, which should have been a floor, are now a ceiling. They will act as heavy resistance on any attempt to bounce. The momentum, or RSI, collapsed, but it's not yet in what we'd call oversold territory. That suggests there could easily be more room to the downside before the sellers are exhausted. This brings us to the most critical part of the analysis right now. The stock fell through several key support levels and landed precisely on the 0.786 Fibonacci retracement level at $114.80. This is the line in the sand. So, the battle is being fought right now in a zone between roughly $114 and $117. For the stock to find any kind of stability, it has to hold this level. What could happen next? If the stock breaks below $114 with any real volume, the technical path of least resistance points down towards the next major support area, somewhere between $101 and $105. Now, for a high volatility stock with a short-term average true range at nearly 10% of its stock price, a short-term bounce is certainly possible after a drop this severe. But any rally is going to face a wall of resistance. First around the $140 mark, where that 50-day moving average now sits. This is a time for caution. The trend is aggressively down. The smart play isn't to blindly buy the dip, but to watch and see if the stock can build a stable base around this $115 support level over the next several days. If it can't, the path to $105 looks highly probable. My job isn't to tell you to buy or sell. Honestly, I wouldn't trust anyone who does. My job is to dissect the data so you can make a smarter decision for yourself. It's what I do. It's probably what my cat would do, if he could be bothered to care about anything other than finding the single patch of sunlight in the house. If you found this breakdown useful and want more data-driven analysis without the usual Wall Street noise, do consider subscribing to the channel. Thanks for watching. Now if you'll excuse me, I have an important matter to attend to. My cat boss requires my utmost attention. DataCat out, stay sharp and stay safe out there.